Have you ever wondered why the rich just seem to get richer every single year, while the rest of us kind of struggle just to build, a basic level of wealth? Well, welcome to this explainer. Today we're diving deep into the wealth divide, unlocking the mystery of compound growth. We are unpacking the fundamental mechanics behind this divide, and honestly, why the specific financial path you're walking matters way more than how fast you're walking it. Picture it like two completely distinct paths. One is just slowly filling up with these rising green graphs and stacks of coins, and the other, well, we'll get to that.
So is it luck, or is there something they understand that most people just don't? Seriously, is building massive wealth just hitting the lottery, catching a lucky break, or a random roll of the dice? Or is there this specific, almost hidden understanding, like a glowing brain literally plugged directly into the financial matrix, that the vast majority of us are simply missing? We're going to map out exactly what sets these financial mechanics apart. And trust me, adopting this completely different mindset, it makes all the difference in the world.
All right, first up, let's talk about the traditional model. We call this the active income trap. And look, I totally get it. This is the path almost all of us were taught to walk from day one.
Step 1, you trade your time. Step 2, you receive a salary once a month. The standard blueprint is pretty simple, right? The clock just relentlessly ticks forward, day in, day out. You put in the grueling hours, you do the heavy lifting, and eventually a fixed salary drops into your bank account. But here is the brutal reality. Your earning capacity is strictly capped by the 24 hours in a day. You're literally trading a finite, limited resource, your precious time, for a fixed amount of cash. And if you have to stop trading your time for any reason, the income completely stops dead in its tracks.
But here's the thing. The wealthy completely flip this equation on its head. On one hand, you have the traditional route of trading time for a salary, but on the other hand, you have buying assets that generate money. Instead of just constantly running on that endless treadmill of trading hours for dollars, they shift their entire focus to buying assets to generate money independently. This isn't just about, scoring a higher paying job. Actually, scratch that. It's a fundamental structural shift in how income is actually created. They take their capital and use it to buy vehicles that keep producing returns entirely on their own.
So what are these common wealth-building assets exactly? Well, according to the data, the heavy hitters are stocks, rental property, and businesses. Think of it like this. Once your capital enters these asset classes, it's like a stream of gold coins flowing into a machine that automatically mints even more coins. It starts compounding totally independent of your daily labor. You aren't trading your time anymore. The assets themselves are doing all the heavy lifting, acting like this automated system that generates wealth regardless of what you're doing on a Tuesday afternoon.
Which brings us to a truly powerful realization from our source material. Their money keeps working, even while they sleep. I mean, just let that sink in for a second. While a traditional worker is at home, resting in bed, earning absolutely nothing, capital deployed into assets is literally generating wealth, hour after hour, seamlessly, totally in the background, like digital investment charts and coins steadily ticking upward in the middle of the night.
And the engine driving this whole automated setup? It's compound growth. By definition, this is the financial mechanism where a small coin becomes 2, then 4, then many, causing a line graph to curve upward faster over time. It is absolutely crucial to understand this mechanical breakdown if you want to build real wealth.
When you plot this out over time 1 you have 1, time 2 you have 2, time 3 you have 4, the math is just staggering. It always starts out small, almost insignificant, right? 1 unit becomes 2, but then 2 becomes 4. And as time marches on, the growth accelerates at every single interval. It's not a straight linear line, it curves violently upward. Recognizing that time is the ultimate magic ingredient when you pair it with compounding, that is what truly separates the wealthy from everyone else.
So you might be wondering, why isn't everyone leveraging this? Well, it all comes down to the ultimate choice, spending versus reinvesting. The real differentiator between these two paths literally boils down to your everyday financial habits.
Think about it, spending every dollar on shopping bags that immediately lose value versus reinvesting your money into stocks and real estate to create more coins. It's a daily habit. Draining your income into depreciating consumer goods stops compounding before it can even start. You're effectively starving your own wealth system. The alternative? Systematically feeding that income back into the compounding engine, things like equities, real estate, or businesses, so that upward curve we talked about can just keep accelerating. Instead of blowing every dollar, it's about constantly reinvesting to keep that crazy momentum going.
The math of the wealth divide is crystal clear, but the everyday execution, that is entirely up to you. So, I have to ask, Which path are you currently walking? Are you stuck in the trap of trading your finite time? Or are you actively building a system that works for you while you sleep? Thank you so much for joining me for this explainer. I really encourage you to take a hard look at where your own capital is flowing today. Catch you next time.